Welcome back. Now at the low point of the day, so clearly this decline is not getting arrested, and this is for the long time that after a long time rather that we've seen that dips are not being bought. It's interesting. At this point in time, the market trading at the lowest point 81.35, and if you pull out the Bank Nifty, that also is practically at the low point of the day. The low was, I think, somewhere around 450 on the Bank Nifty, now at 473. But if you see the intraday chart of the Bank Nifty, 17,468 is what we have right now. Mayuresh Joshi now joins in from Angel Broking. Mayuresh, good morning. It's been a bit of a dull day, but the market has done well overall over the last few days. So let's talk about some stocks. LIC Housing Finance, I believe you like that.
Morning, Anuj. Yes, clearly, I think if you look at the way their balance sheet has been panning out over the last few quarters, very encouraging in terms of how the retail advances have grown at more than 18%. If you look at their cost of funds, it's actually come down because a lot of bank borrowings have gone out of the books. Bond borrowings have replaced that, which has ensured that the cost of funds stay close to that 9.38% mark. The yield on investments has remained stable at 10.85. Their asset quality has been relatively stable in this economic turmoil that we've seen over the past few quarters. So gross asset at around 0.6, net asset ratio at 0.33. The proportion of developer loans is also at 2.45. So again, clearly expected rate cuts to spur credit growth. Within that, retail advances form a huge chunk. Asset quality remaining stable, and clearly I think even the cost to income ratios are quite manageable. So in our opinion, at 2.1 times price to book looks extremely attractive. So any declines, long-term investors can have a look at this stock. Our target remains at 570 over the next 12 months.
Okay. The other stock that you like, Mayuresh, is Aurobindo Pharmaceuticals. You have a 12-month target price of 872. What is the rationale?
Morning, Ekta. So clearly, I think if you look at their different business lines and if you look at their core portfolio of formulations, 80% of its top line of $2 billion with the acquisitions of Actavis and Matrol have actually helped the company in posting a decent set of numbers. So in our opinion, I think specifically with the case of Actavis, I think the injectables business is going to get a huge booster for Aurobindo. The margins are quite high, and the management itself expects 18 to 20 approvals to come through the next 2 years. With Matrol specifically, I think it gets a front end on the OTC markets, and clearly with $70 billion of drugs going off patent over the next 3 to 4 years, it presents a huge opportunity specifically in the antiretroviral segment where Aurobindo possibly has a very, very key strength. In terms of ANDA applications, 379 filed, 201 approvals received. So incrementally, any approvals coming through over the next few years incrementally adds to the earnings of the company. So our own expectations, Ekta, is that on the top line, we're expecting 11.4% CAGR growth, close to 16,500 crores. And again, I think in terms of margins, we're expecting margins to stabilize between that 20 to 22.5% mark. CapEx at 800 crores also augurs well, because with increased R&D and ANDA filings, you will see greater incremental products coming through with higher margins. Again, valuations not too expensive at 17.5 times at 517 looks quite attractive.
Okay, you have a small cap pick as well, CRM Silk Mills.
Oh yes, and again I think Anuj, one really needs to understand that the numbers were not great for the quarter gone by, so we're still expecting sluggish numbers probably to come for Q2. Within the business lines itself, blended fabrics make 75% of its top line, garments that contribute 18%. The volume growth has been quite decent. So if you look at the blended fabrics volume growth, it's close to 9.5%. The garments have done a volume growth of 16.5%. What we are really expecting is with improved cash flows coming through for CRM, the debt equity will come down from 0.6 to 0.4 in our opinion over the next 2 years. With improved cash flows, our own take is that the dividend payouts should increase from 10 rupees to 15 rupees over the next 2 years, and that should also entail in the return ratios perking up. So return on equity of 20.5, return on investment capital coming close to 20.8 over the next 2 years is not ruled out. So clearly a top line growth of 11.4%, close to 1,875 odd crores. Margin should stabilize and come back to that 12.2% mark, and valuations again at 8.5 times I think look quite reasonable. So again a target of 12.21 on CRM over the next 12 months.
Okay, and Mayuresh, let's get back to your frontline picks. Larsen and Toubro.
Oh yes, Ekta. And again, I think this is a classical assumption based on how the capex recovery in the Indian economy will take place. So if one really assumes with the government spending that is coming through and expected to come through over the next few quarters, L&T will be a key beneficiary. Now, if you look at numbers again, I think hydrocarbons has done well in the quarter gone by. And yes, there were some EBIT pressures, specifically on the power and the heavy engineering side. The order book gives comfort. And again, I think the 15% guidance both on orders and the sales growth should be quite achievable for this year. Now, if you look at the SOTP valuation and you look at the core business and the non-core assets that L&T might look at divesting, so L&T Infotech has done reasonably well. We're actually valuing it around 15-16 times FY17, and if that issue comes through, it will be a huge benefit for L&T. And again, I think if you look at the different business verticals, the real estate vertical, L&T Finance, I think our SOTP calculation itself gives a target price of 2,000. So I think it's the best play that we believe in the capex recovery theme, specifically for the Indian markets.
In the pharma space, apart from Aurobindo that you spoke about, in the large cap space, anything that you like?
So Anuj, I think apart from Aurobindo, I think Sun Pharma is something that we continue to like. Yes, I think it has been beleaguered by issues related to the Ranbaxy acquisition, the Halol plant. But in our opinion, I think mostly all these negatives should be in the price. So FY16 probably can be a washout year in terms of how numbers will pan out. But FY17, our own take is that there will be margin expansion. The top line growth should start resuming better numbers, and the earnings growth should also start coming through. So any quick resolutions coming through over the next few quarters on Halol, and again, I think the ANDA pipeline itself remaining strong with a lot of niche products with the Ranbaxy Sun Pharma combined having in its portfolio. I think it will have an incremental earnings impact from FY17. So I think we remain extremely optimistic on Sun Pharma. Our target from an FY16 perspective stays at 950.
Okay, fair enough, Mayuresh. We leave it on that note. Thanks very much for joining in and taking us through all of those picks. Well, just a quick glance at the markets. Now it seems as though the Bank Nifty has seen further pressure. So we're now seeing a cut of around 1% and the Sensex has